What's happening? What's happening? What's happening, everybody? Let me I know some people be saying they don't be getting their YouTube notifications. So I'm gonna send out the back signal one more time in the Discord. Make sure people get notified. Oh, cap lock on. I'm like, why they looking crazy? I'm live now. All right, so I just sent out the bat signal on the Discord. Let me check to make sure the Birdie Bird app working. I don't want to miss. I don't want nobody to miss. I don't want PB like, Till, I ain't know you was telling you what PB hit me up, man. PB DMing me, man. Tim, I ain't know you was it. I ain't know you. I be like, man, I put the thing. They be like, I ain't get that notification. Okay, so the Birdie Bird app working. The tube. Let me see who on the tube. Anybody on the tube? Let me see. Check it out. Okay, say people watching. I see people in the chat. Here to learn to share. Okay. If y'all in here, y'all hit the like button for me. Y'all hit the like button for me. Okay, so I'm gonna put this over here. Put this there. Now, good afternoon. Here to learn to share. We going back. Let's go. This, you know what I'm saying? We doing like a throwback lunchtime lesson. Y'all remember the lunchtime lessons? What's up, KC? What's going on? Hola, Valentin. Buenas tardes. No, that's nighttime. Buenos dias, Valentin. You got the YouTube. Well, that's what's up. What's up, Adrian Farmer? What's up, Tish? What's up, Royce the 06? Who remember Royce the 59? What's up, Royce? What's going on? Lunchtime lesson. Okay, what this is today. First of all, let me jollipize for not doing the overnight price section. I had a dental emergency. For some reason last night, piece of my tooth, this tooth right here on the inside. Woke up at 4:45 to go pee. Had something in my molar. I'm like, what in the world? So I stuck my hand in there, pulled it out. I just held it in my hand until I could wake up enough to go to the bathroom. When I went in the bathroom, used the bathroom, I opened up my hand. It was a little white, looked like a white piece of plastic. I'm like, what in the world? So I dropped it on the counter and I pressed it. I'm like, wait a minute, that's a piece of tooth. So I'm looking in the mirror. Look for where it came from. Can't see nothing nowhere. No broke tooth nowhere. So I rubbed my tongue around and I felt a hole in the back of my tooth. Called the dentist this morning. I got there. They were like, he'd be here 8:30. Got there 8:30. He pulling out his tools, scraping inside. He like, you don't feel no. I said, I don't feel no pain. He's scraping all inside the hole, digging. I'm like, I'm glad I can't feel no pain, because if I did the way you digging, then he was like, I can't hear. Like, I don't see no decay. I don't see any signs of any kind of damage. I don't see here like what I'm gonna do. I'm just gonna put some color match filling on there, some tooth color match on there. Since you're not feeling any pain, there's no decay, nothing like that. So I was out of there less than it took me longer. It took him longer to get to the office than it did for him to patch it up and me be gone. But that's why I couldn't that's why I ain't do the overnight price action review. So to make up for that, if you was on, well, we wasn't nobody on there but Black Spiders and Minty, because it was the third Sunday Q&A for the black spotters, and then the mentees, they, you know, they the highest tier, so they get a chance to be involved. But last night we were talking about market maker models, because one of the gang was asking, hey man, let's talk about how to get in again, how to get into trades again. So I explained my technique of how I look to enter trades, when I look to enter low resistance trades, when I look to enter any type of trade, I'll break it down. And you know what I'm saying? The gist of it is I utilize market maker models, right? I utilize market maker models. Now, since this is a public video and everybody wasn't on there, I'm going to give you a brief breakdown of how I utilize market maker models, right? Quick lunchtime lesson, because I did not do the overnight price action. So we're gonna and all I did was scalp the day. And I'm looking at this now and like, I shouldn't have scalped. I should have just traded. But y'all know I usually don't try to trade for real on Monday. I just, you know what I'm saying, be taking stuff. So I just took a couple quick scalps today, just to show the that the concepts work. That's what I did it for. The concepts work. I took 2 trades, both of them I was only going for like 3 or 4 points, I think, and just to show that the concepts work, right? So quick breakdown of how little Timmy Rogers uses market maker buy and market maker sell models, right? This is the way I do it. If it doesn't fit with you, if you do it a different way, hey, whatever blows your skirt up. All right, so here we go. If everybody know what I call my, like, you hear a lot of people on the internet use the term, let me move all this stuff out the way so that I can, for the note takers. All right, for the note takers, you will hear people on Al Gore's internet say stuff about something called a POI, right? POI stands for point of interest. Did I spell that right? Don't care if I did, right? POI stands for point of interest. Right? POI stands for point of interest. I don't call it a point of interest. I call it what's up, Michelle? I call it an anticipatory reactionary point. It sounds more fancy, right? It sounds more fancy. Anticipatory reactionary point, right? I'm not going to spell all that out, right? So my anticipatory reactionary point is no abbreviations. ARP, right? Anticipatory reactionary point. Okay. So when price comes to my anticipatory reactionary point, I drop down 2 time frames, right? Drop down 2 time frames to see where in the market maker model we are. Right? Drop down 2 time frames to see in the market maker model where we are. You on the Discord? Can you? Am I sharing the screen over there? Let me make sure I'm sharing the screen. I switched over. My phone was tripping. Oh, it was tripping on this. I wasn't sharing the screen on Discord. Right. Okay. So All right, I'm sharing the screen on Discord for anybody in the gang that want to pull up in Discord if you got any questions. And you can also type it in the chat on the tube. But on Discord, you can unmute and ask me. Okay, so you go down 2 time frames from the time frame of your anticipatory reactionary point. Okay, why do I go down 2 time frames? Because 2 time frames down through the back testing, I initially got this concept from Jesse Rogers, Casper. He was talking about trading, and I was like, wait a minute. I was like, that's 2 time frames apart. So so I started back testing it, and come to find out, a lot of people, not just Jesse, Trader Day, a lot of people, 2 time frame down is like the sweet spot. If you're looking at a PD array on the 4 hour, the 15-minute is a good entry time frame. If you're looking at a 1 hour chart, the 5-minute is a good entry time frame. If you're looking at a 15-minute chart, the 1 minute is a good entry time frame. So what I do, I start with like the higher time frame, and whatever time frame the PD array is on, I drop down 2 time frames to see where we are in the market maker model. And then, since I'm an intraday trader, I go all the way down to the 1 minute and start looking for an entry based off of that higher time frame. But the market maker model starts to flesh itself out nicely 2 time frames down. And if you go 3 time frames down, more, so the more you go down, the more detail the market maker model is going to have in it. Right? So, with that being said, look at this baby go. Look at this baby go. If this was a day I was really trying to trade, I would be really happy right now. But since it's not a day because it's been a day. I had to go to the dentist. I tried to go take some stuff to the dump. The dump was closed down because the scale wasn't working, because the computers was out, because a storm went through and knocked some out. It's just been crazy. And my wife was like, welcome to Monday. Happy Monday. How you gonna have a Monday when you retired? I'm having a whole Monday when I'm retired. Okay, so here we are right here. You see that, we are fleshing out a market maker buy model, right? These are 15-minute candles. So if I go up to a 4-hour chart, right? Come up to a 4-hour chart, and you will notice that on this 4-hour chart, see where I drew this right here? See how I drew that little loop-de-loop? See how I drew that little smiley face there? This 4-hour chart came down to a 4-hour fair value gap. That is an anticipatory reactionary point, right? We came down, right? We came down below sell side and traded into this 4-hour fair value gap. It's a 4-hour fair value gap and a volume imbalance. I've adjusted it, but if you notice, this is the high of it right here at that volume imbalance. So we actually touched into it, right? We came down and touched an anticipatory reactionary point on the 4-hour time frame, right? And when you look at where we are on this 4-hour, it don't look like much to be desired. Not at all. But if you go down to a 15-minute, right, and look at the same time frame, oh my goodness, it is you. It is you. It is a market maker buy model. See, 2 time frames down. You go 2 time frames down, and the market maker model will start to flesh itself out, and you start looking for clues at your anticipatory reactionary point. Now, that is the quick review. Okay, for those who wasn't there. Now, what's your point of saying all this today, Tim? I'm glad you asked that question. Okay, so here we are. Here we are Every now and then. See right here, when we traded down on this hourly time frame right here, on this hourly time frame, we traded down and we came into our new week opening gap, right? We traded into our new week opening gap. That is an anticipatory reactionary point. Not only did we trade into it, we took out sell side liquidity on this hourly time frame. So we came into an hourly sell side liquidity, right? We got a liquidity void, on the hourly, right? We got a huge volume imbalance on the hourly. We got a lot going on right here because it's the new week open gap on the hourly. Okay. Let's put this in replay so we can go back. We're gonna go there. We got the whole hourly chart there, candle there. And then hourly, so 15.5. So we go down to a 5-minute chart. Okay. So when we go to a 5-minute chart, I forgot to draw my loopity swoop. Poopity scoop, the poopity scoop. I forgot to draw my loopity scoop. Okay, so on the hourly, we're coming down. Right, we're coming down here. And we're coming down. We get down here to this anticipatory reactionary point. And if this works out to be a market maker buy model, we want to see something that's going to make price do this, right? And come back to at least the beginning, right? Now, when we come down here, we're looking for an opportunity to flesh out a dealing range, okay? So we came up here, came above this liquidity over here. Then we dropped down and we came below that liquidity there. So as of now, right, every time we push lower and lower and lower, you know what I'm saying, that'll be the low of your dealing range. We took our buy side over here. We took our sell side over here. So now that's our dealing range. Now that we got our dealing range established, right, and we're coming to an anticipatory reactionary point, we can start looking for an opportunity to trade back to at least equilibrium, right? And if it's a true market maker buy model and the price is bullish, right? Which price has been bullish all night. We were talking about we had come to a higher time frame anticipatory reactionary point on the daily, and we saw a possibility that we could trade back up toward a daily fair value gap. We talked about all of that, right? So if this is going to play out, the new week opening gap at this, looking at this hourly chart running into the hourly time frame running into the new week opening gap. That's a higher time frame PD array. We're getting into that higher time frame PD array. Now we can drop down to the 5-minute, right? We can drop down to the 5-minute and look for evidence of price wanting to continue up, right? Wanting to continue up. Y'all, hold on one second. Now, hold on one second. Okay. Right. So, we had the whole hourly candle. So we're going to go back now that we're on the lower time frame, because we're going to do it because in real time price is trading. So when we do the playback, if we got an hourly candle, that's going to give you the whole hourly candle, right? So now price is coming down. We're watching price come down, and we hit our anticipatory reactionary point coming into it right there. Okay, so we're gonna cut it off where we're gonna act like it's real time, right? So we're coming to our anticipatory reactionary point, and we see here, right? Okay, if this is a market maker buy model, we're still on the sell side of it, right? What kind of clues we can look for to anticipate this market maker buy model to start to curve back up, right? One, we already talked about. we came to an anticipatory reactionary point from a higher time frame. Okay. 2, once we came to this anticipatory reactionary point, if we look left, we notice that on this 5 minute, right, we have completed a market maker sell model here as we came into this anticipatory reactionary point. Let's change this color. We're going to leave that one red, and we're going to swap this one to green. We're going to swap it to green. Okay. So 2, we just completed a market maker sell model. Okay. So those 2 things that's lending to, hey, these are clues, a clue, a clue, a clue. These are clues. We're completing a market maker sell model. We're coming into an anticipatory reactionary point, right? So now, as the 5 minute is coming down into this anticipatory reactionary point, right? What I do now, I see on the 5 minute, I see, okay, we're coming to a place where price can possibly reverse, right? Because we're completing the sell model, coming into an anticipatory reactionary point, and it's looking like we're getting to the bottom of a market maker buy model. So at this time, what little Timmy Rogers does, I go down to the 1 minute. I go down to the 1 minute. And as you see, the 1 minute gives you more detail. It's just more, it's the same thing. The lower you go, the more detail the market maker model is going to give you, right? So here's the sell model that we completed. And then the sell side of the sell model is now we're looking for it to become the buy side of our buy model. Okay. All right. So now we're completing the sales, and then we look in here, and you see we got us a nice consolidation here, right? Then we take off. That's the start of the move. And then we get distribution right here. Take off. Trade back up. You know what I'm saying? This right here can be our second stage of distribution right there. And we take off. So we look at it. You know, you don't know how many stages of distribution you're going to get, but you know, we're seeing stages of distribution play out, right? So when we're coming into it now on the 1 minute, now that we're coming in, we're down there on the 5 minute, I'm looking for something to say, hey, I'm ready to go back up because we're at an anticipatory reactionary point, right? If we look right here, you see right here, if we look right here, we came down. We're inside this anticipatory reactionary point. All right, let's put a line here. Put that there. We're going to scroll over to see where the price come down to when it did that. We came all the way down and touched that high right there. Right? That's a 430 high from Friday. Right? Touched that 430 high right there. Came down into that 430 high. Right? And then go back up for a second. Right? We was on the 1 minute. We were on the 1 minute, so I went up to the 15 minute. Right? 2 time frame different. Right? We came down, and if you see that right there is the high. Right? That's the high of this bullish order block right there. So I was on 1 minute. I went up to the 15 minute to see where that 1 minute candle went, because we were in the scope of the 60 minute, and we went down to the 5 minute. The 5 minute was giving us what we wanted, so we went to the 1 minute because I'm an intraday trader to see if I can get the best possible entry I can. Right? Okay. Let's go back to the 1 minute. Now we've come to a higher time frame, anticipatory reactionary point. This 1 minute is coming to a 15-minute order block, right? The 5 minute has come into 60-minute sell side. We're sweeping 60-minute sell side. 1 minute coming into a 15-minute order block. It's just 2 time frames, jumping 2 time frames. On the 1 minute, right? We hit it and we repel it. When we repel it, we come up and we have us a shift in sentiment right here, right? Got us a shift in sentiment, right? Actually, that's actually a breaking market structure because that high took out that low right there, right? So we got us a breaking market, a bullish breaking market structure right there on this 417 candle, okay? 418 candle got us a nice little fair value gap there. 419 candle right there traded into the fair value gap, right? Started coming down, coming down, coming down, down. See that right there? See how we went back up? Get out the way, line. Right. Let me see there. Somewhere around there. Yes, right there. Somewhere around there like that. Now, so this right here, in the sense of things, this right here would be like a low risk short, right? This could be a low risk short. Why would this be the low risk short in the market maker buy model? Because this right here is the lowest amount of risk compared to the low of the buy model. If you get long here and you're wrong, this is all the risk that you're risking from here to there. You're risking, right, 3 3/4 points right there. You're risking 3 3/4 points if you're wrong. Okay. Now, have a nice little pictorial here. Because y'all know I don't usually do this, but since I'm on the live internet, I got this, and you see right here, right down there, 1 minute fair value gap as it traded back down into it right there, scalped out right there just before that high right there. Quick little scalp just to show that the concepts work, right? That's all I did, just to show that the concept worked. And you see it's another one over here too, and we're gonna go there. We're gonna go over to that one there because we were talking about everything we was talking about the low risk buy, and we was talking about the silver bullet over here on this side, right? We was talking about the silver bullet on that side, the original silver bullet on that side over there, right? So and on the silver bullet side, I just took a random entry. I didn't take like my normal fair value gap retrace. I just took a random entry because to show that you can trust the concepts when you're on the right side. Okay. So now, y'all see y'all saw the low risk buy. I explained the low risk buy of, you know, why I took it and what I did. And you see how it worked out. Now let's go up and let's move the candles forward. What time I need to get to? 12:48. Get to 12:48. I don't advise doing this during this time because it's like I was just back here doing some stuff. I was back here paying some taxes and paying some stuff on the credit card, and I saw this wick off top right here. And now this is where you don't want to get stuck on the wrong side, right? So remember, I was trading on the 1 minute. I was trading on the 1 minute, and looking at the 1 minute, right? It looks like we have completed the market maker buy model. Looking at the 1 minute, see, that's how we came down, and went up right there. Looked like we done completed the market maker buy model. Okay. You don't want to get trapped, being bearish, and get caught here, zoomed in on the lower time frame. Because if you back out to the 15-minute, remember, I'm on the 1 minute, back out to the 15-minute, 2 time frames apart, back out to the 15-minute, what do you notice? What do you notice this candle right here did? What do you notice that candle did? Somebody drop in the chat. What did that candle do? The one with the long wick, the wick off top right there. I heard people call this a wick off top. What did this wick off top candle do? Somebody drop in the chat what that candle did. What's up, Sanjay? What's up, Deborah? Relative equal highs. Relative equal highs. Equal highs. Very good. You do not want to get caught up trying to short equal highs. When it's that smooth like that right there, let price run off and leave you if it wants to. More times than not, you will get your head bust trying to short equal highs. All right, so 2 time frames up, we have equal highs. So you pump your brakes on anything that looks like a bearish setup on your entry time frame, which would be, that's right, smooth highs. You pump your brakes on anything. Look at this right here. Anything that looks, see how we came down, traded into that, drop down, traded into anything that looks like it's going to take you down, down, down. Red Knight going down, 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 down. If it look like it's taking you down, ignore it and let it run off without you. That's what I do. I said, if this wants to go back down, I'm going to let it go. Right? I'm going to let it go. If you're coming into a higher time frame, anticipatory reactionary point, you can, if you come into a point where you expect price to reverse, then you can turtle soup short. You can turtle soup sell above equal highs. That's the smart money reversal. A turtle soup long and a turtle soup buy and a turtle soup sell. That's the smart money reversal. The low risk short comes after the confirmation. I don't turtle soup. I want price to tell me what it wants to do before I get in. Turtle soup, that's too, hey, that's risky Roger. I don't turtle soup. I don't turtle soup. That's just me. Okay. So we're looking for an attack on these equal highs. Why? Because price has been bullish. We're moving bullish, right? And when we got up here, we just kissed the buy side and we pulled back. Okay. So, and when we look, we're looking at our model. The first time we engaged, we got down here on the low risk buy, right? That's what we got in on low risk buy, and we did the scalp. We took it off, right? So we got the low risk buy, and then this right here, this would be our first stage reaccumulation, right? So this right here would be our second stage reaccumulation, right? So what does that mean? If this is your second stage reaccumulation, when you trade back down into it, that's when you should be getting long, right? Because now you got a low resistance liquidity run there. Now, I didn't take it right here like this. This is how you would trade it. You got your second stage reaccumulation, right? You trade back into it, right? And you're reclaiming an order block over here, right? You're reclaiming an order block over here, right? So we got We got our bullish order block over here, and we're reclaiming a bearish order block over here. You see what I'm saying? Y'all see it? Can you see it? Right? Can you see it? You have a bullish order block here, or we can use the candle with the lowest down close inside this consolidation there. Let's go with the one with the lowest down close. You want to use the one with the lowest down close, right? And then if you look over here, you're reclaiming a bearish order block, right? So that's when you're getting, that's what we talked about. I mean, we talk about reclaiming order blocks. That's what we talk about. But I didn't take it there because I wanted to be able to show you can trust the concepts even if you get like a sucky entry, right? Even if you get a sucky entry. So and this right here was going, all this was like in lunchtime too, right? That was in lunchtime too. So over here, right here, matter of fact, I think that's the candle right there. I think that's the candle right there. So when, and then during lunch we'll run some lows. So you see what happened right there on this lunchtime. We came below this consolidation and we took out some lows right there, because lunch is known for running some liquidity, right? Lunch is known for running some liquidity. Now, what did this do? Right? This gave you a nice dealing range, right? Gave you a nice dealing range to look at, right? So now that high took out buy side, this low took out sell side, right? And remember when we was talking about buy side delivery, sell side delivery, buy side delivery, somebody put in the chat for me what is going on right here in the discount of this price move. What's happening right? Why did I circle that right there? This is the discount of the price move, right? But why did I circle it right there? We talked about it last night. We talked about it last night. And if you weren't on that last night, and you can still answer, right? What about that area I just circled in the discount of this dealing range? What's going on? Balanced price range. It is a balanced price range, and we are not anticipating price to come back to that balanced price range, right? So when we got this candle right here taking off, right? This candle right here took off, boom, shot up there, taking out this high, right? As we traded back down toward this high, I entered right around here somewhere, right? Because I was trying to get in, like you see this inversion fair value gap right here, right? I was trying to get in on this inversion fair value gap right there, right? What's the high of that inversion fair value gap right there? The high of that inversion fair value gap is 50.3325. Let me see where I got picked up at. 50.3325. Look at that. And that's not my normal, because if you notice, there's no fair value gap right here. I didn't wait for a fair value gap to form. I took the entry right there on that, the high of that inversion fair value gap, because this was a balanced price range, and I was taking it off the inversion fair value gap just to show you that the concepts work. The balanced price range, we've run sell side during lunch, right? We have equal highs up here, and I was just going for a quick little scalp. Just when I'm scalping, I'll take 3 or 4 points and I'm gone. I don't get greedy. I take 3 or 4 points and I'm gone, right? And you see here, right there. So that's 3.5 points, 50.3325 to 50.3675. 50.3675 right there. And then got to do it for the haters. Let me get this out of the way so y'all can't see my people like, oh, well, where's I'm changing to the account that I was trading in. Nope, that's the wrong account. That's my sim account right there. All right. And then if I come over here and turn on my plots, apply. There you go right there. See, there you go. That's the exact same thing that's on the picture. Right? There's picture. 5009.75 to 5013.50. 5009.75 to 5013.50. 5033.25 to 5036.75. 5033.25 to 5036.75. Right there. And just like that, that's how they. Oh my goodness, this stuff really does work. Matter of fact, me and my brother was just talking, and he was like, "Man, that stuff be bouncing off that stuff, like you said, man. It like it be that stuff be working. He'd be like, hey, it should bounce off this, bounce off that. It's gonna do it, and he'll like that stuff be doing it, man." Hey, enjoy work, Michelle. Enjoy work. That's all I have, man. Do anybody got any questions? I just want to get on here and do like I tell y'all, man, when I see stuff happening in real time that we just talked about, right? We just talked about it. We say bullish breaker. Yes, that was a bullish breaker. It didn't quite get to the bullish breaker, Sanjay. It didn't get where I got in it. It did go down and touch. It did go down and touch the bullish break. It touched the high of the bullish breaker. Oh no, it went a little bit lower. It got into the bullish breaker. Yes, it did. Right here. There's a bullish breaker right there. Price traded down into that bullish breaker right there. So there's another, and then it came down to that breaker, right? It came down to that breaker in the discount right there and to that order block right there. Then it went up, right? So it came back down to the order block, came back to that breaker right there. It touched that breaker first. So it came here, touched this breaker first, and then it came down to that order block. It came down to that breaker, and then it went up. My entry was up here at this inversion fair value gap right there, which is not my normal entry. I usually trade off of an imbalance, right? I use in hindsight looking at this, right? In hindsight looking at this would have been an opportunity for me to enter here because that's when the imbalance came in. We didn't get an imbalance in this area right there, right? We didn't get an imbalance until right there. So that would have been my entry if I was doing it my normal way, my normal trading way. There's my imbalance right there that I would need to trade off of, right? There's my imbalance that I would need to trade off of. But yeah, trust the concepts. It will work. It will work for you. Not sharing. Y'all can't see my screen? I'm looking at it. It's I think I'm sharing. Y'all can see my screen, right? If y'all can't, y'all just missed that. I ain't gonna go back through that. That's it, man. Do anybody got anything? Is there anybody in the Discordia? Who's in the Discordia? Miss V, you got anything?
No, I don't have anything today.
All righty. Do anybody in the chat? If you just backrest and look what If you just, I'm assuming back test and look through macro times, most times you will see a setup for real. It blows my mind, but patience pays. Yes, you're right. Oh, you said it before I put it back up. Okay. Hey man, that's it, man. I appreciate y'all for tapping in and hanging out with your boy for the quick lunchtime lesson. I just want to go in and anytime something play out, as soon as we talking about it, I try to jump back in and be like, hey, look, remember we talked about this yesterday? Or hey, remember we talked about this earlier today? Hey, remember we talked about this last night? If you ain't a black spider or a mentee, then you weren't there for us to talk about it last night. But since I didn't do the overnight price action, I said, hey, I'm just gonna do a public video to say, hey, remember all the stuff we be talking about in the overnight price action? By gee willikers, this stuff really works. Hey man, that's all I got, man. Again, I thank y'all for tapping in with me. Hopefully, I was able to share something that helps somebody like get an aha moment or just make something make a little more sense. If by chance I did not, I jollipies and I will do my best the next time to help you just get a tighter grasp on these silly little things we call ICT concepts. Share it with us by Michael J. Huddleston. And I'm just regurgitating the way it makes sense in my mind. Till the next time, it's your boy, Aranya Grande. Tasha. Hey, tell Snoopy I said, it's been a while since we talked, so I had to have a little bit longer conversation with him that time. So make sure you relay that exactly like I said it. Do I need to repeat it? You need me to repeat it again? Huh? Do I need to repeat it? Hey, man. Y'all be safe out here these trading streets, man. And again, if I ain't give you nothing that was good this time, I'll try my best next time. Gone, man.